Welcome everyone, and thank you for joining Mazuma USA today for our webinar on 5 financial tips all business owners should know. My name is Jeff, and I'm an accountant and a tax professional here at Mazuma. At Mazuma, we are committed to helping you save time, stay on top of your finances, and have peace of mind regarding your accounting, bookkeeping, and taxes. That's why we are excited to connect with you today to share this important information. I will be taking questions at the end of my presentation, so feel free to throw your questions in the Q&A box as we go. All right, let's get started. Here's a quick overview of the topics we will discuss today, including planning for current and future business needs, the importance of prioritizing based on that plan, and delegating, how to maximize your tax deductions, and how to stay on top of your business plan and finances. We have a lot to cover, so let's dive in. Plan for your current business needs. First off, let's talk about the importance of a business plan. Having a great idea is a good start, but you need a roadmap to help you succeed. Have you looked at competing products and determined what sets yours apart? Conduct research about your clients and potential clients. Figured out your profit margin. Looked into creating a marketing plan. Thought about how you are going to pay yourself, taxes, and other expenses. These are essential elements to your business plan. Today, we are going to focus on finances and what you should be planning for. Tax planning. Calculating tax rates can be tricky for small business owners. Most small business owners need to pay their usual tax rate, their income tax rate on their earnings, plus self-employment tax. Self-employment taxes cover Social Security and Medicare taxes. As a rule, if you make over $400 a year as a self-employed contractor or business owner, you will need to pay self-employment tax. If you don't know your tax rate, that's okay. Most people fall between 10 and 15%. So when you add in self-employment tax, you should plan to save between 25 and 30% for taxes. Now you want to save 25 to 30% on your net income, not your total income. Your net income is how much you make after you factor in your expenses. So it's your income minus expenses you pay for your business. For example, if you earn $10,000 but spent $500 on new equipment, $250 on marketing, and $1,000 attending a conference, you would pay taxes on $8,250, not on the full $10,000. Succession planning. Setting up a succession plan includes strategizing around how to plan for someone who might leave, as well as develop future leaders in your company. Although it doesn't directly relate to finances, it can impact your financial planning and liability. Think about and plan for how your business will continue to function if a key owner, partner, or employee leaves. Life happens. People get sick, retire, leave, or companies grow, and you need to hire new leaders. Plan for a number of situations. Write down processes and what is needed to keep the business functioning so things can keep running smoothly in case anything happens. Expenses. The expenses for your business will be unique, but some common expenses include equipment, marketing, inventory, rent, Wi-Fi, production costs, shipping, taxes, salaries, business tools and subscription, and the list goes on and on. Make sure to think broadly so your plan covers all these expenses. After you estimate the amount of time and money it will take to get your business off the ground, triple it. No matter how carefully you plan, life happens. unexpected expenses occur. Make sure you have enough wiggle room to handle them when they come. Plan for future business needs. Start your business with the mindset that it will succeed. Start planning for the future now. We're going to cover two important items you will want to consider early on. Set up a safety net. Protect yourself as a business owner. Once you start making money, set aside enough to cover 2 or more months of expenses. Markets can change quickly, so give yourself enough time to figure out solutions if an unexpected dip happens with your business. Some business owners save 6 months to a year's worth of expenses. You decide what's right for you, but start now to save. Also, don't risk everything on one venture. Rely on one market. Diversify. Make diverse investments such as stocks, real estates, and securities, and don't rely on one vendor or website to sell your product. Branch out, get creative, have a backup plan. The most important, protect yourself. Protecting yourself includes making sure you're considering insurance, whether it's business insurance or personal insurance like life or health insurance. Okay, another topic, retirement. Business owners have extra flexibility that allows them to strategize around their retirement contributions. At the end of the year, you can determine how much you want to contribute to your retirement to help lower your taxable income or tax bracket. And there are many options, IRAs, 401ks, etc. It is often helpful to talk to a financial advisor to figure the best option for your situation. Reach out to our team and talk to an accountant to learn how you can maximize these savings for your unique situation. We're here to help. Prioritize and delegate. Small business owners are go-getters. So while we would like to do it all, we have to recognize that we often can't. A key mistake. In fact, there's often one of the hardest mistakes business owners have to learn. You can't do it all yourself. In fact, doing it all yourself can often stunt your business growth. Be wise with your time. Most businesses spend 120 working days per year on administrative tasks like taxes and accounting. For small businesses, it can be twice that much. The more time you spend figuring out books, the less time you have to focus on growing your business. You will need advice and trusted partners, companies, or employees to help make your business succeed. Prioritize and delegate. As your business grows, you will find there are 1,000,001 things you can focus on in a day. Set a few key attainable goals for yourself each year or month. Then use those goals and your business plan to decide what you will focus on each day. All the other things you can either save until later or delegate. Success in your business will come when you find others who you can trust, whether it's a friend, employee, partner, or company. Find resources that can help. That's what we seek to do here at Mazuma. We love helping small businesses eliminate the stress of accounting and bookkeeping so they can focus on the success of their company. Maximize your tax benefits. Now we come to deductions and tax benefits. We have done some great webinars on this topic. I will give you a good overview today, but if you would like a more in-depth look into this, check out the free resources on our website at mazumausa.com. How much will it save me? How much will a tax deduction actually save you on your taxes? It's important to weigh out the costs versus tax savings when you're making business purchases. Luckily, we have a simple formula that can help you see the value of these deductions. Business expense times your tax rate equals money you save on taxes. For example, if you spend $2,000 on a new camera for your business, and your tax rate is 25%, your savings would be $500. If you don't know your tax rate, again, using 25 to 30% will give you a close estimate. Of course, you can't write off any expense as a business expense. According to the IRS, you should write off expenses that are ordinary or necessary. Ordinary meaning they are common and accepted in your industry, and necessary meaning helpful and appropriate for your business. That doesn't mean you can't be creative when it comes to tax deductions. Think broad, ensure you know and document the business purpose. Common deductions. That being said, if you aren't sure where to start when it comes to tax deductions, here's the list of common ones. Business travel. This includes plane tickets, transportation, gas, rental cars, meals, and conference fees. Business meals, retirement contributions, vehicles. This can include purchases, leases, mileage, repairs, maintenance, and insurance. Phones. This can include the initial purchase, repairs, and monthly phone bills. Equipment, supplies, employee expenses, or contract labor. Insurance. This includes health insurance as well as business-related insurance expenses, such as data breach insurance, liability insurance, and property insurance. Financing. If you finance expensive equipment, vehicles, or more other equipment for your business, you can write off the full purchase price of the asset using bonus or depreciation in the year you financed it, even though it might take you years to pay it off. Website and software, education, taxes. Did you know you can deduct half of the self-employment tax? Marketing and advertising, home office or rent. With rent, it's easy to calculate your business expenses because you have a monthly bill. For a home office, that can get a little trickier. Check out our guide for getting the most out of your home office deduction. Internet, phone, and other bills such as water, heat, air conditioning, internet, phone, hotspots, monthly subscriptions for marketing tools, and professional fees. Review important plans often. Now that you have a lot of plans and processes in place, review them often. Review your goals and business plan. I suggest keeping a print out of your goals someplace where you can see them as you work. Look over them daily. When you start to feel overwhelmed, look at those goals and just focus on what you can do today. That will help you tackle what matters most. Don't ignore financial reports. And of course, review your finances often. Financial reports will help you budget, make projections, secure loans for funding, and build a foundation for financial success. I want to quickly go over some key financial reports and what they can tell you. A profit and loss statement shows exact income and expenses for a month or quarter, whereas a balance sheet shows an overview of your assets, liability, and equity at a given point in time, like as of the end of the month. Each of these is important for managing different aspects of your company. For example, you should be using your profit and loss statement to help manage your business and finances. Get familiar with these and learn how to read them. And of course, reach out to our team if you have any questions.